The market rally finally cracks with investors nervous about Friday's jobs report. So markets were still rallying through Thursday midday despite the week's growing US-China trade tension and mixed jobs data. However, investors grew anxious heading into Thursday's close and ultimately finished lower. So where's the caution coming from? Well, on the tariffs front, the US and China's leaders finally got on the phone, which should have been a positive given the stalled tariff talks. However, it may have been mostly fluff, with both sides essentially coming out and saying it was a good talk and they'll continue to talk. Basically, nothing really new, just another talk to have a talk. Meanwhile, imports in April plunged 16%, likely significantly impacted by the massive tariffs imposed on China, and to a lesser extent, the 10% tariffs globally. And then the weekly jobless claims. Jobless claims data tends to be a bit volatile, but last week spiked to a 7-month high and outside the 220 to 240,000 range we've been oscillating in. So labor markets continues to be a key focus of interest this week. April jobs openings were solid on Tuesday, but it's lagging data given we're already in June. Meanwhile, the May private employment data from ADP came in very weak on Wednesday. This puts the focus on Friday, tomorrow's jobs report. Unfortunately, to keep up market optimism, the report will need to thread the needle. A strong jobs report could likely keep the Fed on the sidelines for rate cuts, while a weak one could reinforce the private employment data, signaling that the labor market might be cracking. Markets are probably looking for a soft number, but still strong enough to quickly stabilize. It's also likely the reason why investor confidence has faltered into Thursday's market close. So Friday's jobs report, what's expected? Expectations are for 105,000 non-farm payrolls added in May. May's estimate is quite a bit down from April, but still well above last summer's lows. Meanwhile, unemployment is expected to remain flat. All in all, hitting expectations would show a slowdown in new jobs while not cutting into existing unemployment. Again, a softer number, but strong enough to quickly stabilize off of. I guess we'll see on Friday.